6:02 a.m. Pacific Standard Time. Today's date is 10/31/2011. Happy Halloween. MMT's gap open up. What it is that it's a bear gap open down Monday. Now, when we always talk about bull trends and bear trends and or bear market rallies, we are always constantly reevaluating where the tops come into that wall of resistance and price action. We clearly know that the short squeeze rally heavily related to headline news occurred last week. And now, just as we are from 1075 up to that area of resistance, that stocks individually have hit a wall of diamond resistance. So therefore, when we do have these gap open down Mondays within a bull trend cycle that October has generated, is that what happens is that when that short interest comes off that tape, there isn't support levels become very weak because there isn't any buy to cover there. The last two major Fridays, including this Friday weekly expiration and the prior Friday, was that we didn't see any real program trading in the last hour of the markets. And that has happened for 2 weeks in a row, and that is a major change. The thing about the size of the gap open is, once again, Baidu had reported great earnings, but here's that Soho that everyone likes. Left elbow gap down, that moves. Here's that left elbow on that price line at 4.68. And of course, Google's gap down, and here's your Baidu that follows, 3.12. Then naturally Apple comes in, Signup comes right in there on the left elbow, and there's that bull. And if that bull, and when we hit that left elbow MMT, we would have to ascend very quickly in your MMT platform. And what does that mean? It means that mathematically you would start to ascend and you wouldn't look back, and stocks would be breaking to all-time highs. Now, if that bull is going to get in on the last trading day of the month and has any belief at all in the prior sentiment rally of the bear and the bull, well, you would see that happen on the left elbow gap down, and it would be verified with that big fat green bar next to the red one. Yeah, it would. It has to have a ratio turn that would validate that that's where that price stopped and it's time to get on board. So on the left elbow, during bear and bull markets in a pre-market future gap open, gap down type scenario, in this case it's a huge gap open down on the Nasdaq with left elbows in play. And 1.00 and higher qualify. You got wind down there too now. And now let us not forget the Chinese ADRs, that bull's right here. Minus 2.47. There's Google, minus 4.1. What are we going to do? We're going to get over here to the 590 call. We're going to watch this side of the market on a 600 put. Naturally, that's going to gap up in value. The high was $18, and then they came down to 13.9 on the low. So they're going to get some premium here. And when Google makes its support level and then ascends off the bottom, this $600 call will hold its price and then go back up in value. And the 590 call, when they take, so when the premium goes up here on the 600, when they take this down, and I'll give prices out here in a moment after the video and whatnot. We've talked about this already, but we'll look at how to get that 590 call wholesale. Then after we get that hit, now this name, because it's had a great bull rally, from turning from a bear rally back to a bull rally with that weekly buy signal on Google, is that you have to bounce strong. But nonetheless, we're going to watch what that gap is over here on that 600, okay, because we have a gap down. And the thing about it is, we did get to that area, that 600, that was that psychological area. Now, what's on that left elbow gap down is where those fund managers, do they want to show up or not? Remember, there was a lot of power outages. Remember, what drove the market higher within that original bear move was that things are all of a sudden cured everywhere around the world. And how long does that belief go? It will show up into the tape. But the individual stocks, same thing will apply on Apple, same thing will apply on the price line down here. And that call side of the market, we were running the 11.19 $400 call, and we did a lot of work on that one yesterday. But we're also going to be watching this key $400 put on this Apple only for one reason. Apple has to keep bouncing off its support levels and burning higher off that 400. So its little left elbow gap down is that, are people buying record levels at the iPhone? That's what helps make that trade. That trade there, though, that $400 put must be benchmarked, because if this side of the tape comes down and bounces off support, then that means equities are selling off, and that at that major daily diamond resistance levels in play. Now, we'll talk about the S&P 500 and what that will look like as far as these contracts over here go. And these are called S&P 500 index options, and they're 11.19 and they're already loaded. And we were looking at, below the market was that $1,200 put. Okay? And what I'm going to do is I'm going to put that up here right now, and that was $6 by 6.5. Now just remember that there's a lot of economic data coming out this week, and I've already talked about it. You got your monthly unemployment report, you got ADP in the middle of the week, you got your ISM coming out, you have a chain, and you got a FOMC meeting. You're going to have a lot of volatility this week, and these would need to be traded, would need to be more executed on an intraday level, because you get a roller coaster gap the next day if they like something with the headlines, and it gaps up. At least you took your profit. You can't get zapped overnight. Okay, so we're going to monitor that $1,200 put once again, because it's deflated. All right, for the bear side of things. And we'll be watching various other things within the S&P 500 index option structure. Just remember, these names on Google have to come down. You got a $4 gap ratio down. When it comes down, the 590 call, it gets cheap. You get your entries there. All right. And once that bounce, it has to be validated with at least, you'd like to see a 3 teeny breakout right next to that last red bar on the left elbow gap down price that you're seeing right here. MMTs at 595 by 55 and whatnot. So that's the left elbow gap down structure in the pre-market. And it's also a major bull raid that we have had in the calendar month of October. So you had 5 months down and you've had 1 month up. Let us not forget that. That's not a very good track record. Is that bull going to want to come off the sideline is going to be the key. If they are, they're going to buy Apple. They're going to buy Google. Google already outperformed its earnings, and so did Apple in its own way. They're out selling lots of iPhones worldwide. We'll be monitoring that one. The price line, well, you know, it's had a big run from 411 to the closing price of 523 off of that last bear raid. So, hey, the volatility remains, and MMTs. The market's going to open in 19 minutes, and then we're going to go over some of the prices on the 590 call, what to look over here at the $600 put, because the puts will work. If you can't get above those diamond resistance levels on the daily, and they stay as resistance, well, so what? Then that means that this wholesale side of the put side for the bear comes into play, and we have to monitor that. Strong trends have to bounce off support levels and take out the previous day's closing price. Then that is a verifier. Okay? So on an intraday level, they're tradable. And getting wholesale here and maybe adding to the wholesale price here at the $600 call would come into play, because it will be verified with that 3-minute buy action bar The qualifier that to know that it's really strong off support will be a 3 teeny bounce, but then it holds at least the previous half bar and then bounces another 3 teenies to the higher side. That's when you know people want to own this name, the Apple name, the price lines. I'll even throw in the Amazon here. Okay, so bear raid on a Monday morning gap down, and the bear raid is, once again, the bear raid comes from here. These are Soho leading the way. Check for earnings. The price line, Google's, so it's all pre-market futures, MMTs. And the thing about it is we're doing quite well. And it's how you get that, if the bull is going to show up, you're going to hit that left elbow teeny line, and you're going to, like I said, to qualify, you're going to have that 3-minute buy action bar 3 teenies higher than the previous low end of that left elbow gap down.